Hi, everyone. Welcome to another KE Report webinar. In this webinar, I am featuring Fury Gold Mines traded on the TSX and the NYSE American under the symbol FURY. I am joined by the president and CEO, Tim Clark, as well as the senior vice president of exploration, Bryan Atkinson. What we're going to be focusing on here is the updated Eau Claire resource and the company that has really transformed some of its focus towards Eau Claire. The recent drilling that has grown that resource now to just under 2 million ounces. We're also going to be talking about some of the exploration potential at Eau Claire, as well as some of the other projects that the company holds in their portfolio. I want to thank all of you for tuning in, as well as all of you who have already sent me some of your questions to my email address, fleck@kereport.com. I've added those questions to a document that I have. You also have the ability to ask questions in this webinar through the Q&A feature. So please use that. I will monitor those questions and also interject during the presentation here to break it up a little bit and get your questions answered in a more timely basis. We'll also save some time at the end of this webinar for Q&A. For all of you watching, this recording will be available to you. So if you miss anything, if you need to tune out for any reason, you can come back and watch the full recording to get the full update. Now, Tim, Bryan, thank you very much for joining me. Thank you very much for putting together this presentation. Tim, I'm going to leave it over to you, but as I mentioned, I'm going to be jumping in with a couple questions here. So, guys, thank you very much for joining, and Tim, take it away.
Corey, great. Thank you for having us, and thank everybody for joining in. Yeah, we're in a good spot right now with the gold market, and I think what we want to do is talk about our resource as well as the potential upside in terms of discovery. We are financially in a good position because we have now, Bryan, I don't have the slides up if you want to throw those up.
Yeah, they're up, Tim.
They should be up there for you, Tim. Can you not see them?
I cannot see them.
You're in the Zoom room and everything, right?
Yep, I am.
Okay. Let me just check this. Sorry about that. It seems like I see them here. So,
Well, anyway, I can talk to this quickly. We're on the first slide, right?
Yep.
Yes.
So basically the first slide is all about why invest in Fury, and the bottom line, in my view, is that I came into the company looking and believing in the bull market, and we've got a great platform in terms of assets in Canada as well as the financial background. The two things you really need are a good management team and a good financial background, and we have an asset that we've basically used to create a lot of cash availability down the road. I think I really can't see this thing, Corey, so it's going to be distracting throughout the whole thing. Bryan,
why don't you try logging back on then,
yeah.
Tim? See if you log back on, if you can see these. Sorry, everybody.
Yep.
Bryan, I guess you and I can chat a little bit about what Fury is going to do here. One thing, we can even talk about some of the questions that have already come in terms of the updated resource, just how much work went into that updated resource from when you took that over.
Yeah, definitely, Corey, and that's great. And we'll get into more detail when we get to those slides. But what's gone into the resources, Fury's drilled about just over 70,000 meters globally across the project in the last 3 years since we acquired it. And about 50,000 of those meters have contributed into the resource, both at Percival, coming up with that inaugural maiden resource out there, as well as the additions that we've done at the Eau Claire deposit. So really sort of tight. And when we look at historically, and this isn't later on, but historically, they drilled over 350,000 meters into the project, and that resulted in about a discovery rate of about 4 ounces per meter. With what we've done over the last bit, with a better understanding of the geological controls, we've nearly doubled that. We're at 7.4 ounces per meter drilled into the project. So, and some of those were exploration ones. We've got some good hits out at Snake Lake that haven't been incorporated into a resource yet, and a lot of open space to move yet. So I wouldn't discount that discovery rate going up higher even.
Okay. Now, Bryan, you're going to be running a lot of these drill programs, right? The future drilling that's going to come out of the company. How aggressive is the company going to be with drilling?
Well, we like to, juniors are, we live or die by the drill bit, right? Some good geochem anomalies will only get you so far, but, we call it the truth machine. So nobody really starts paying attention until you can put a drill bit into it. And, on both sides, going out and drilling some of these anomalies that we have and that we like, is a proof of concept, or if we hit, obviously. But equally as important, if we miss, it helps us refine our targeting going forward. And then as we go further down the pipeline of our drill targets, we have a better, we get a better hit rate and a better success rate because we learn from those misses almost as much as we learn from the successes.
Makes sense. Tim, we have you back here. Can you see the
Yep.
slides?
Yep, I got the slides. It's all good.
Okay, now we're back live. Here we go. Tim, take us away on this first slide then.
Well, we've kind of talked about the first slide already, Corey. So let's just jump into it and go to the next one, which is basically what I think is a big pitch for the company, and this is what sold some of our larger investors coming in, is that I think there's a big theme. If you think about the bullishness of gold, yeah, what's going to follow is consolidation. Consolidation has been talked about for a long time now. And when you look at our properties, we have big properties next to big companies, and it's all in Canada too, which I think the geopolitical issue is going to get worse, not better. And having things in a country like Canada where there's jurisdictions that are not only geopolitically safer, but really supportive of mining. And one of the reasons why we focused in Quebec in particular is Quebec is one of the best regions in the world for mining because of the government support for the drilling programs and for the companies themselves. But again, the takeaway is big consolidation play means all of our properties eventually get swallowed up. And I think Hecla is one of the interesting topics right now. If we want to flip to the next slide. There we go. Needless to say on this one, though, is we've got our two properties here, which are in beige, and we got the Newmont property up north. It's about 50 kilometers in between the two of them. The message in Quebec again is consolidation, and I'm not sure how many people are aware of the fact that Newmont does have their mine up for sale. They're selling their Canadian assets after purchasing Newcrest. They were going to raise $2 billion. It's creating a lot of interest, particularly up near where we are. And what we did was we purchased their half of the joint venture. So we own 100% of that property next to theirs, as well as all this expansion property, which is where we've been drilling for the last several years. And again, consolidation is sort of the play here. The other part of it is infrastructure. The James Bay has been up there for many decades now. There are roads and power everywhere. If you look at the spillway down to the right-hand side, bottom of the page, you actually have to drive across that spillway into our property. Our operations are 1.5 miles up the road. You can drive an 18-wheeler to this spillway. When we brought our chairman in to visit last summer, he couldn't believe it. He had spent the last 10 years at Agnico. He said Agnico has nothing like this in their exploration side. And a lot of investors have got to remember that you don't need super high grade if you have incredible infrastructure. It's all about the margin. And if you happen to be finding grade, and it better be really good if it's up in the mountains, because it's a lot of helicopters and a lot of miles to get up there to get the equipment. So for our purposes, we do have a high grade mine on top of that, and I'll let Bryan explain to you as we go further. Next slide.
Yeah, thanks, Tim. It was good before, and that's why we acquired it back in 2020. We really liked the resource, and we saw a lot of upside in it, and that's what we've kind of spent the last 3 years trying to realize. And coming out with a big increase in the measured and indicated resource of over 300,000 ounces added into the Eau Claire resource, and then there's a big increase in inferred ounces, but a lot of that's coming from over 90% of that is coming from a new resource, an inaugural resource out at Percival, which we've only wound up having to put 7,500 meters of drilling into it ourselves. So these sort of nice progressive increases where we're seeing over 530,000 ounces added in just a short time, and I mentioned our discovery rate of almost 7.4 ounces per meter drilled compared to the historical of just over 4 ounces per meter drilled. So we've really kind of upped the the overall discovery, the focus, and been able to pull that all together into a consolidated targeting strategy that wound up in this. And when we look at this, these grades are the combined open pit and underground. So our open pit grades at Eau Claire are extremely high, and they compare well to a lot of our peers' underground grades. So we're pretty stoked about that. And as Corey mentioned at the start, we're getting awful close to the 2 million ounces combined as we go forward here at decent grades going forward. So looking at Eau Claire itself, and this is really the focus because this is where we've really added big understanding, more than 2/3 of the resources coming in out of here. And our open pit grades combined, measured, indicated, and inferred are 4.65, right? Because most of our ounces are in the measured and indicated category. Underground, we're combined grades of 6.2 grams per ton gold underground, and then that's our open pit grades, as I mentioned, are nearly as high as a lot, which you'll see in another slide, a peer group that's their underground resource grade. So we're really high grade, really going forward, expanding this, growing it. And what we'll show on this next slide is that it's all still open. I know Corey's got a question here loaded, but I'll just pre-answer it. Is where else do we grow? This is basically all the white space you see on this long section. It hasn't been drilled out that much. It's open down dip. All this area down is open. Out to the west and out to the east, it's open, and even through the middle of the deposit, the historical deposit there. So what you're seeing here is all the modeled veins, and in blue is what was modeled historically, and then red is what we've added. So that's the additional 300,000 ounces that we've added through there. Now, one of the key things that we've really done is tried to focus on the geology and the structure and just get a better understanding. And you see that in our hit rates increasing nearly double historically. What we've also done is gone into this area where there was historical vein modeling, and we've come out through a better structural understanding. Is historically they had these 30 to 40 degree veins coming through here, and in the mining sort of world and production scenario, flat and 90 degrees are good. Anything sort of in between there is bad, but the closer you can get to vertical after that, the better, right? So now with our new vein interpretation, we've come out with nearly a 65 degree dip. So really nice and steep. So that way gravity's helping you in an underground scenario, in an underground production scenario. So as we progress and, take this to the next level and, potentially do an updated PEA, you'll see a lot of, good updates on that where, the costs and the amount of development actually decrease from, the previous PEA that was done on the old resource.
Okay, so Bryan, a couple other questions then. When you talk about the expansion potential, it looks like deeper drilling. Would that be encompassing underground, or would that still be part of the open pit?
Well, there's some really nice mineralization that still sits out here in the to further expand the open pit, and we did all of our modeling on a 1 gram per ton vein model. So some of that lower grade stuff didn't get into it. So there's some room up there, but and there's room to connect these two. You can see sort of the conceptual pit shells in there, and there's room in there to connect them as we go through the gap drilling. And then some of the most interesting results we had at the end of the year, 3.5 meters of 17.6 grams and 3.5 meters of 32 grams. We're in this block right here. So that opens up this whole shallow bit up here, actually all this area right above our hinge target. So it's not all necessarily deep drilling, Corey. But our grades clearly show that it's a good underground resource as well. But 4+ gram open pit is pretty sweet as well.
Now, another question, I guess balancing out, you mentioned discovery costs and how those have come down when your team started drilling them. But it's not just discovery. It sounds like with this new interpretation, you also learned a lot more about this resource. How did you manage to combine those two when you were expanding the resource, but it sounds like also drilling within the resource?
Yeah, we didn't really focus much drilling within the resource. A couple of holes just on the periphery of previously modeled veins, just to get a better understanding of how much they could grow. And then at the same time, there was a lot of data. This was a data-rich environment, but nobody had really taken that time to put it all into a consolidated database and look at all the different layers in one bit. So we took the really good geophysical data. We put it in 3D. We learned a lot from that. We did a televiewer program this summer where we got in situ structural measurements down, 25, 30 holes throughout the resource, which really helped us with the remodeling and targeting. Our targeting out on the hinge, we were hitting the veins this summer within a meter of where our model said they were going to be. So we had a lot of confidence going into that. And going forward, I think what we've learned, it's narrow veins, it's high grade veins, but we can get onto them at a very regular pace and, better hit rates and better discovery rates coming forward. And we've taken what we learned here and at Percival, which is a different style of mineralization, which we'll show next, and applied that to the entire 55,000 hectare property with that same view of taking all the data into one nice consolidated database and just using all the data there, going back to first principles. We've got a new geological map. We've reprocessed all the geophysics. We've gone through, looked at all the historic drilling and geochem, and come up with some really robust targets on the broader property package. But this, Eau Claire resource is, it's 1.6, almost 1.7 million ounces on its own, and it's open in all directions. So, I think, we've got a big land package with lots of exploration potential, but we've got a really good, strong resource that, kind of sits at the core of that as well.
Now, another question too. You mentioned the narrow veins. There's a lot of veins here, a lot of narrow veins. With any of the recent drilling, have you been able to find maybe a source deeper down? And have you been able to connect any of these veins for potential mining scenario moving forward?
Yeah, I think we've been able to target some of the areas where, the regional shear zones and stuff have allowed these veins to get a little bit bigger. We've seen, like I mentioned earlier, 3.5 meters of 32 grams, 3.5 meters of 17.6 grams. Out on the west side, we drilled 7.5 meters of 23 grams. So, it's that whole understanding of the overall structural controls and geological controls on this that's really helping us get into those wider zones. And with this resource update, everything was done at a minimum 2 meter mining width. So even if some of the narrow veins aren't necessarily 2 meters wide, we've diluted them out to that 2 meter width so that we can actually it's a real extractable sort of resource number that we've come up with.
Okay, thank you. I guess before we leave this slide, look, you've told us where you can add ounces all over. It's open in every direction. Where, in your eyes, as a geologist, are the easier ounces to add then?
I think, like I mentioned, this block that sits right here had some of our best hits into it in the end of the year. It's a new structure that we just tagged into, 2 holes into it, both fantastic holes, and that's wide open. So what you kind of miss in this long section is that it's all sort of smushed together. This actually sits, well to the, within the resource footprint, but it's the northernmost vein system that we've tagged into so far. So it's shallow and it's really nice and open. So, I think that's an easy area to start adding into. And then we really like what we're seeing in the gap zone here. Again, nice and shallow extensions of, the already modeled veins and stuff coming out. And, we've got a meter meter and a half of 45 grams sitting in there. So I think those are kind of the two key areas to focus on. And everything else is, you fill in some of these gaps, you start connecting those, which add tons and ounces really quickly as well. So, but I think as an exploration, and if we want to show the overall potential of this, is to continue down sort of this trend to the west and start filling in this quote unquote gap zone, because we've clearly started to fill it in already.
Okay, sure. Thank you. We can move on then.
Percival, we put very little drilling into it, but we put a lot of work ahead of the drilling into it to understand what was going on there and get a real sense on the controls on the mineralization. It's very structurally complex, as we've noted in a couple of our news releases, and getting that better understanding of the overall shearing geometry and shear direction has really helped us with this model and putting together a mineralized body that was continuous enough to actually put a resource over top of. So it comes out lower grade than Eau Claire, fair. But most of the ounces are in an open pit, which is still sitting at 1.8 grams. We're only 14 kilometers away from Eau Claire. We've done the preliminary metallurgical work, even though it's a different style of mineralization. We know it goes through the same process flow sheet that the Eau Claire mineralization would work through. So it doesn't need to be the standalone. And with it only being 14 kilometers, there's a winter road that already links the two together. So it's a nice sort of additional satellite deposit. But what's really important about that is, from Percival all the way up to Serendipity is the same geological setting. And what we're looking for out there, and what we've got some really nice targets going on, is areas where the structure is a little less complex. We still want the structural complexity, but we want to be able to find areas where there's potential for better preservation of a large body. So as we go out there, and some of these targets look very similar to Percival, some of them look bigger, and then we've got the quartz tourmaline veining targets, up on the north end here that look a lot like Eau Claire. So, Percival's important. It's a nice resource to come out with that maiden. It still remains open, particularly down depth where we've had some hits of 13 and a half meters of 8 grams. We had a meter and a half at 279 grams that we hit this year out there. Those all remain open. So as we start to build this out, along it, but also looking along sort of the string of pearls sort of approach, and finding 2 or 3 others that are comparable, if not even better than Percival as we go out there.
Now, what made you go to Percival first? With all these other targets on the docket, why Percival? Yeah, last year.
It had about 7,000, 7,500 meters of drilling into it already, and showed some really good grades within. What happened is the previous operators looked at it as a bulk open pitable potential, which we're showing here. There's potential there, but they took their headline hit was 93 meters at 2.2 grams, which is great. That's a great hit to go on. But when we looked at it, all that grade was basically consolidated into 2 subparallel lobes, which are part of a fold system through here. So what we wanted to focus on was those higher grade portions of it, and just see if there was within the bulk open pitable mineralization, if there was potential of taking that to depth. And that's once we started figuring that out, we took the geophysics and put it into 3 dimensions, and we're able to show a nice plunge going off to the west, and we tagged into it. So that was, it was very sort of exciting, and what's important here is that Percival didn't show up on the conventional geochem historically, and we were able to image it through our biogeochemical technique, and then we took that out along the entire Percival to Serendipity trend, and now that's how we've developed these targets that that we're going to go after this year.
Okay. So does Percival rank high up to follow up on, or do you rank some of these other targets or even follow up work at Eau Claire higher than Percival?
Yeah, Percival is interesting, and I think what we've come up with in the model in this has really explained a lot of our uncertainty that we had throughout the drill a year. So I think it's a nice target and definitely worth follow up. I think we really want to be discovery focused. So if we have Percival showing and that the mineralization is clearly open along Percival, if we can go along that trend and in the same rocks, find one, two, or three others of these sort of thing, and you have a quicker chance of showing additional growth out there making a new discovery. And that goes with Eau Claire as well. I'd love to put in some big step out holes on there and continue to be able to show that it's open, because right now all of our holes are encompassed within the resource. There's not like some hole way out in the yonder that we can say, oh look, no, it grows out to there. So especially on the western side, I'd like to be able to put in one or two of those holes and be able to show that space out there as well. And then while we're focusing on the exploration side up here as well.
Okay, thank you.
Corey, we do get, we sit down with these producers and they love what Bryan and his team are doing to expand Eau Claire. But they're also thinking bigger picture. They're looking for bigger resources. And if we can show a string of pearls along the 30 kilometers that we own, that's a huge get for them. And so Bryan's out there looking at these other formations that are built off of much larger iron formations. So that's the hope. And we're going to go after them.
So it's really having Eau Claire and Percival. The resources there is kind of a fundamental base, but sounds like you're going big with exploration then, trying to find even other deposits, bigger deposits on property.
100%.
Okay.
Yeah, and we'll show some of that potential here in a couple of slides. So, we took the update and, we kind of amalgamated, looked at 22 other companies and, largely Quebec focused, our peer group that has been put together, whether internally or externally, and just threw it all on a spreadsheet just to show kind of where we sit. And you'll see, Fury kind of, at the bottom three. But what's interesting is, we've got the highest open pit measured and indicated grades. We've got the highest underground inferred grades, the highest open pit inferred grades. We're the fifth highest underground measured and indicated grades on this peer list, and it's we're getting an $8 an ounce valuation when you take out our cash in hand and equities and that, which puts us right at the bottom of this list of our peers, and it's kind of interesting, and our global ounces. So this is combined Committee Bay and Eau Claire and Percival. Puts us right in the middle of the peer group on total combined ounces, and some of these other companies are combined properties as well with their ounces, and it's just sort of that interesting comparison of trying to figure out that valuation, that lag in our overall valuation, and this $8 an ounce really sort of puts it when you look at your average, your median is in the $20 an ounce sort of range, so more than double what we're getting valued at right now.
Tim, let's get you in here just for a comment on this, because this is an interesting slide. You would think with the grades that the resources have that you would get more value for those ounces. What have you heard from some of the larger investors or institutions as to why, as you're pointing out here, there is that disconnect in enterprise value towards ounces?
I mean, I think you can get two things. One is we have this position in Dolly Varden that's unique, and Dolly is at the top end of the valuation side. They've done a great job. We are huge backers of theirs, and I'm on the board, and we have another Fury team member that's there with me, and effectively, this is worth 3/4 of our valuation. So what it's doing is it's squeezing our enterprise value for our gold. And at the same time, what I think that investors, and one of the reasons why we're doing this webinar, is to re-educate people on how much work has been done on this asset. The Eastmain mine, was a project that just really wasn't brought along properly. And then we brought the right guys in. And so we did a lot of the heavy lifting in the first 2 years. And I think that with the new geometry and the understanding of what the potential there, this is a far superior asset than what I think people were giving us credit for, because we have the right guys doing it. And so when you combine those things, you also have the effect of the sector. A lot of these gold stocks trade in line with each other, and it's very hard to break out, even though you're doing better job. And I think we've been better across the board in a number of items, but we trade in line because of the flows into the sector. The goal here, and this is what I've been sort of presenting for quite some time, is our goal is to be the best positioned company as we come into a bull market and it all gets released and unlocked. And I think assuming something happens with Dolly, there's a lot of rumors about what Dolly Varden what's going to happen with Dolly Varden if they happen to get bought out. Will this unlock all the pent up gold upside that we have in our valuation? And that's exactly why I'm here and why I've been buying more stock and why I'm pushing my friends and family into it, because I think this is a unique situation within the gold market, and that's what it is.
So I guess the big question then is, what do you do with those Dolly Varden shares? They are such a large part of your overall market cap. Do you monetize them? Do you hold them for the potential upside that Dolly offers?
Look, we've monetized them a couple times to kind of do other kind of commitments. Recently, we sold $4 million worth, and that was used to acquire the other half of the joint venture from Newmont. It was I think, a really smart thing to do. And I think if you ran a portfolio as a money manager, you probably would be clipping coupons on that and taking some profit. But it's not the same thing. If we start selling Dolly Varden, I think it would undermine the potential upside that they are trying to create in their price to be bought out. And if we divvy out shares, that would basically do the same thing. I think we're close enough to a potential, takeout as silver runs up, as they get their drilling done this summer, and they've got a big plan. They've got a lot of money. I think it creates a lot of possibilities in the fall. So we're going to stick with it for now.
So as much as we talk about this total M&I and inferred ounces, as you said, it's not just Eau Claire, right? Or Eau Claire and Percival. It brings in the global ounces that the company has. Do you think you're just not getting any value for the other ounces, like at Committee Bay?
Committee Bay, that's another interesting one. We got zero. We had zero for that. In its previous company with Oren, it was valued around 200 million. It's got about that in terms of investment already. Fury's put 60 million in already. It's got 1,000,003 ounces. It's a place where no one likes a beach house in the winter, right? But in the summer, it's the most popular place in town. And that's how I look at it in a bull market. And when the bull market comes, we've kept it, our property rights. It costs a couple $100,000 a year. It's not a lot of money, but we have a 300-kilometer greenstone belt with a 100-person camp. We've got a runway for a 737. We've got a lot of the oil and gas already halfway up there and sitting on standby. This thing's ready to go. And one of the things that I think that piqued my interest, and this is when, spending 20 years on a sales desk, you kind of can see things coming ahead of time and people start poking in. And last September, when Bryan and I were at Beaver Creek, over half of our meetings were with big company producers looking at Committee Bay. They were not looking at the small stuff. They were looking at the potential big stuff, because that's where you get big hits. So as people want to take a swing, you want to be in that realm. And this is one of the things I love about Fury is you have a lot of ways to win. You have a lot of ways to hit your singles and doubles and get a real resource going, but you have big swings in your portfolio like Committee Bay. And we're going to go back up this year. We're going to do a follow up on some holes, and Bryan can talk to you about those too, that were really interesting. And they were, at the time, there were some of the biggest hits out there. And we're going to do a survey project and start getting more geared up for these bigger companies, because I think the bull market's coming and consolidation's coming.
Okay, Bryan, look, we've talked a lot about the resource. We've talked about enterprise value. Let's talk about what's coming then. Can we get into some of the exploration plans, please?
Yeah, definitely. We've got a big project. We've been learning as we go, and we've been advancing some of these these targets that you see on this figure to the drill ready stage. And we took what we did at Percival, and it shows up as a single sort of anomaly here. But when you break that down and look at this Percival trend here, we've actually got 14 targets just in there. We did a biogeochem survey up here around Serendipity, and we've got some really nice targets in there. They're fold hinge, they're iron formation. It's kind of where you want to be in these orogenic settings. So we're excited to go up there. Our team's pretty pumped. They've come up with some really nice multi-element anomalies and drill ready targets up there. So we're really excited to get out there. As I mentioned, there's room for more drilling at Percival. There's a lot more room for drilling at Eau Claire. And we've got Snake Lake within here. We've got a lot of other targets on here that we want to continue to advance. So, as you advance a target to drill ready and you drill it, you got to have something else on the pipeline coming up because it's exploration, right? It's you can have a great looking target, put a hole in it, and come out with a zinger, or you can come out with a duster, right? So we always want to have those next ones coming up, and we prioritize those based on how close we are to the Eau Claire resource, the road access. There's road access, winter trail access throughout this 35,000 hectares that's here. And then we've got this whole greenfields package out here with the Lac Clarke along the Canard Deformation Zone. Some really nice targets came out of that. We've got a soil sample out here that's 1.8 grams per ton in soil. So we want to get out there and see what's there. So a real sort of discovery focus. We've shown the resources open. We've shown the resource can grow. The grades hold together. It's kind of sitting there begging for some more expansion, but the whole property's begging for another couple of discoveries on it. We want to get out there and make those.
So what's it going to look like then? How many targets do you think you'll drill this year, even into next year? How many holes do you need to put into each target to give it a reasonable test?
I think we're kind of we're realistically 3 to 5 holes into each target, get across, test the stratigraphy. And I think we test 3 to 5, so 3 to 5 holes and 3 to 5 anomalies this year, and that gives us a sense going forward of what's good, and it spreads your chance of success out on a few different targets and target styles and target positions within folds and stratigraphy. So that's good. Plus, our main sort of excitement. Oh, let me remove all my scribblings.
Gotcha.
So I can put new ones on. We're really excited about this biogeochem anomaly because what happens here is the sediments that host Eleanor sort of wrap around here, and they're kind of boring, and then come in here and they fold really tight back on themselves. And through here is where we've got some really solid biogeochem anomalies. They're over 200 times what our background is. It's sitting in a nice area. There's some nice down ice sort of gold and till anomalies with pristine gold grains sitting in there. Ice directions this way, so we're really sort of hoping that this all comes together. So we want to complete this biogeochem grid. It's only an orientation level sort of study, four north-south lines and 2 east-west lines. We want to tighten that up, get it finished, and be drilling into this because this is potentially, it's the same geophysically, geologically, geochemically. It looks very similar to Eleanor. So we've got some high grade potential through here, and we're really excited to get in there and tag into that biogeochem anomaly.
So at Eleanor South, then, in your eyes, this can be hard to answer, but what would a good discovery hole look like in terms of, let's say, grams per meter?
Yeah, that's a great question, and I get it a lot, and even from our board when they try to figure out our KPIs for the year, and and it's what makes a discovery, right? So something that would light the world on fire, 20 meters at 5 or 5 meters, getting into that 100 GMT sort of realm, right? But something we follow up on is in the 5 to 10 GMT sort of 2 meters at 5 grams would Eleanor grade, underground grades is only 5.38, right? And their resource grades are right around that 5 gram as well. So if we're in that 5 gram sort of realm over 1, 2, 3 meters sort of thing, I think that really, it's proof of concept, and it really lights, tells you to go back in there. So discovery wise, anything in the 2 to 5 gram realm, I'd be super happy with. But obviously, if we can get into that 100 gram sort of thing, gram meter sort of intercepts, that would really, light things on, really highlight this area for us for sure.
Now, in terms of that recently completed drill program, point two that we see there, where were those 7 holes located?
So we focused in on the Chichu tonalite here and just sort of on the extensions underneath. We saw some high grade within the overall low grade, and that's pretty typical of these reduced intrusion. And the more we look at it, we think there's an orogenic overprint, which is what's controlling the later orogenic overprint, bringing in some of these high grade quartz veins and stuff. And it's sort of this vein array, right? It's not quite a stockwork, but there's dips and directions going everywhere through here. So we just wanted to kind of focus in on this sort of area and just see if some of these high grades, there was any continuity to any of these high grades. And we liked what we saw in the core, and we'll hopefully get the results out in the next 2 to 3 weeks here.
Okay, so big picture, when we take a step back and look at this area, look, you already went through the fact that Newmont has that Eleanor mine up for sale. Is this a potential area consolidation? Is that what you're drilling for, to show that, hey, you can build some resources right next to this Eleanor mine, so why not just consolidate that whole area?
Yeah. Go ahead, Tim. That's you.
I mean, it's 14,000 hectares. It's smaller than our other property, but this is where all the interest is right now because of that sale at Newmont. The reality is they've got Goldcorp's old mill that's running at half capacity, but it's still one of the top 3 largest producing mines in Canada. And they need ounces. They need a lot more ounces. If we happen to lock in on that biochemical target right there, I mean, you can look at a map and you see how close it is. And proximity is important because it cuts into your margin. If you found a lot of ounces there at high grade, I don't see a reason why they wouldn't just buy our whole company. And I really think so. And when I sat and showed this map to a lot of the investors when I first got in this company, and when at that time we only owned a third of it, the comment was, typically you find ounces next to gold mines. And we've got the Chichu deposit on one side, we got the Eleanor deposit on the other side. We got a huge anomaly right over in the middle here. I think from an exploration swing and potential for big discovery, this is it.
So let's say whoever takes over that Eleanor mine, whoever takes over the infrastructure there, sure, it'd be great to build some ounces at Eleanor South and simply mine those at the existing facility. Is the Eau Claire deposit too far away from this Eleanor mine and the infrastructure to potentially use that as feed as well?
I'll let Bryan answer some of that, but we've talked to some of our guys on the board who used to work for Mike Hoffman, used to work for Goldcorp, and he said absolutely not. Especially with gold price moving up, it makes it a lot more economic. But you could run a road right down the electrical line that goes right down to our property, and you can certainly high grade our mine, and if we find another mine out there, that all can work in the whole area. And I think the idea is when you look at this all in James Bay, there's a big push too from the Quebec investors. They would love to see consolidation in their area. It's good for everybody.
Sure. Okay.
Thank Bryan, you. I don't know, from a technical standpoint, it's all about numbers, right?
Yeah, no, exactly. And it's if you can make the trucking work and that, the current routing, it takes you out and around, and it's sort of a circular route. But Tim mentioned there's linear infrastructure linking the two with the power line and that. So, it's definitely a consideration, and it's the highest grade, biggest resource in James Bay aside from Eleanor at Eau Claire. So if somebody's coming in there and looking at it, and at our current valuation of, what did we say, Tim, $8 an ounce enterprise value, and you're getting it for free basically, right? So it's if somebody's coming in and spending a few hundred million or whatever on buying Eleanor, you got another $8 an ounce you can pick up, and that's why we're trying to really get that sum of parts going so that it's not just a freebie when that happens.
Okay. And remind everybody what our grade is compared to Eleanor.
Yeah, well, you see, underground grades of 5.3. Ours is 6.2, so we're almost a gram higher in our grades. And typically when you convert measured and indicated into proven and probable reserves, you lose ounces, but you don't necessarily lose the grade because you're getting into it, right? And their reserves or resources are actually lower than what our resource is. When you look at their measured and indicated of 4.6, we're 6.25. Their inferred is 5.7. We're 6.18 in our inferred. So it compares really nice. And there was an internal study done, back in early or late 2000s, 2010s, where, they looked at the network that was done at Eau Claire, and it works through the Eleanor mill. So there's a lot of synergies there, and they're only 50, 60 kilometers apart. So one just has to figure out how to get from A to B. And I think it's a fairly simple equation at that point.
Okay. Thanks for addressing those questions, guys.
I think Tim mostly went over Committee Bay. Big land package, big hit in 2021 with 14 grams over 10 meters. The interesting part of that is it wasn't in the R formation. It was in this deformed meta sediment that sat in a sub-parallel shear zone. So when we go out with the shear zone sort of model and look at the geochem and unexplained gold and till anomalies across the entire 300-kilometer long belt, we come up with some really clear targets that, really high grade gold and till anomalies where the iron formation has been drilled and came up dusters, doesn't explain the till anomaly. So now when we look at it from a structural perspective, and there's these sub-parallel shear zones sitting there 100, 200 meters away from the iron formation, or even 50 meters away, they become clear targets to go out. We've got one in particular out at Raven where our exploration manager, David Rivard, in 2021, grabbed a grab sample from it. It ran 34 grams per ton gold, visible gold all over it. It's never seen a drill bit into it. So these are sort of exciting times to get into it. We're going to try to go up there and just prove up some of these targets and, get a rehash of the exploration technique and the exploration targets and the whole exploration model up at Committee Bay this summer.
So any more insights into how many meters approximately you might drill up at Committee Bay?
This year, probably 0. We just want to develop get up there and get some drill ready targets to go. The nice thing is we own the drills, they're up on site. As Tim mentioned, we've got lots of fuel on site, both for the helicopters and the drill rig. But I think, and Tim can speak to this, is what we're really seeing is a lot more corporate interest in this big land packages in Nunavut in general, going forward. And we've got a high grade resource that's wide open sitting up there. The hit from 2021 is 120 meters out of the resource. We've got, the high grade stuff at Raven that I mentioned. And we're going to, while we're up there this year, we're looking at getting some potential joint venture partners up there to come and have a site tour, have a look at it, and get a general sense of their temperature on having a look at Committee Bay.
Okay, yeah, that's a question too. Would you JV it? It sounds like you would.
100%, yeah.
Okay.
We love it. I cut my teeth up there as a summer student back in 2000, 2002, 2003. I was there when they did the actual discovery holes into Three Bluffs and that. So, it's a great project, and it's a big land package, and even though there's been a lot of expenditure on it, it hasn't always necessarily been the most focused and best exploration up there. So I think there's a lot of opportunity up there as well.
Look, Corey, I mean, we'd be happy to drill it, but we don't want to go out and dilute our shareholders right yet, and when these companies are not quite given the value that I think they should. And going up with a partner is kind of the way you create an exit strategy and the way you sort of are able to monetize it later. These are massive projects, and it's a lot better to go with a team.
Oh, absolutely. And let's face it, it's expensive to do work up there, right? So as you said, you can't just dilute when you have all these other targets on other projects.
That's exactly how we look at it. And we get a lot of subsidization from the Quebec flow through charity money. And we've got a lot of big swings that we haven't even really touched yet. And so, I think the question mark a lot of people ask us is, well, are you going to go back and do resource drilling? Well, the answer is we just put out our resource update. We don't have to. We've shown it's open in all directions. It's going to get bigger. What we really want to do is get some other hits and discoveries to really front this into the bigger companies that are going to get interested. And I think between what we have in terms of swings at Eau Claire and out to the east, and especially the joint venture, and it's not just the Eleanor anomaly, but it's up near the Sirios property. There's a lot of potential ground to cover there too. And so I think between all that, and then you start seeding in, going up to Nunavut, and if we get a partner up there, then all of a sudden you can do a lot more things.
Yep. Okay.
And
Near-term catalyst then. Time
yeah,
frame
so
on these. What are we looking at time frame in terms of the news?
well, we're going to put out a project plan near term, and I think everybody's been asking for that. I think we pretty much explain what we're going to do. It's a matter about how much money you want to spend at once. I think last year we spent a lot more than we're going to spend this year, and the idea is we want to pick our targets a lot more and be more thoughtful and wait for the assays to come back and then really go after the high priority stuff. And so Bryan has got to come up with that in the next week or so, and with his team, and then we've got the money, and then we'll make a sort of back half adjustment, probably pivot in the end of the summer when we get these assay results. The other one is the geochem that we're going to be doing in May. That's at the Eleanor anomaly. We'll get those assay back at the end of the summer, and then we're hoping to get up there to drill this year. We're waiting for a permit, and we'll get back to everybody on that. But we might have to wait till next winter to get up there and get over the ice. But we're hoping to get up there earlier. And then also we're waiting for our assays back from up and drilling this spring in April, and we're going to come out with those hopefully in the next couple of weeks.
Okay. So those drill results are going to be important too, but all the other exploration plans. Any more points to add here? We have a couple questions that we haven't addressed throughout the presentation.
Sure, love the questions.
So one asking about some of the past concerns around that Eau Claire deposit were potentially a high strip ratio. Lots of waste rock. That probably just involves the narrow vein, the type of mineralization. Have you guys done any work to address that? What do you think the strip ratio could be?
So no, that's a very interesting question, and it's it is due to the narrow vein, but it's also due to the vein geometry. In that slide where we looked at the resource, that improvement from 30-degree dips up to 65 degrees is really going to help that, and it helps on the dilution model. The open pit strip, what's in the resource estimate at the half-gram cutoff, and we used a 0.5 revenue factor pit for that. It's 15 to 17 to 1 strip ratio, so it's high, but you're 4+ grams, 4.4 grams, so it sort of covers it off, and it's really underground. You could go underground from surface, and you wouldn't be losing too many ounces, right? So that's the other side. There's different ways to mitigate that strip ratio, and the improved geometry is going to be the biggest thing that helps it as we go forward.
I guess just for clarification, you're not looking at going into any sort of economics, right? This is more discovery, more exploration focus for the near term.
Yeah, definitely. So the resource estimate, round numbers, cost about $50,000, right? The going rate for a PEA these days is between $300,000 and $1 million, right? So is that the best bang for our buck, or is going out and being really discovery focused and putting those meters into the ground the best bang? And I think what we're hearing from our shareholders is that it's more driven towards the discovery side rather than an updated economic study.
Oh, that's what the market's been telling too. The
Yeah.
market wants discovery. They want that growth, not necessarily economics.
And this is what
Yeah.
this is what the companies are telling us too. They you know they don't want us to do that kind of stuff. They want us to pound it out.
Yeah, acquiring companies, they run their own economics anyway.
Yeah.
So I guess final question, big picture. This might be hard to answer as well, but what's the overall potential in terms of size, ounce wise, at Eau Claire, at Percival, and at Eleanor South? Eleanor South might be really tough to answer, but those other assets that the company has.
Yeah. I think,
Well, I mean, if you're asking me, it's probably one thing. If you're asking Bryan, he's going to give you more scientific review. I think the only thing I would poke in ahead of Bryan is that Eleanor South, land, that area has the same scale as Eleanor, if that gives you an idea of what it could be. We don't know. We haven't poked a hole in there yet, but that's what it could be. And on Eau Claire, I think I think what's exciting, I think that has a lot of room to move. What's exciting is on the rest of the property, and I think what a lot of people are not giving the rest of the property. When you look at that, it doesn't look that big, but it's 30 kilometers on our southern border. Is 30 kilometers. We have a lot of unexplored property that we haven't even touched, and that's when we sit down with like the senior guys of these production companies that they're like drooling when they see with that potential. If they can get a resource in there like Eau Claire, and then they can find another Eau Claire or two Eau Claires, now all of a sudden it's game changing.
Sure. All right. Well, thank you. Guys, I really do appreciate this update, this general overview here of the resource and what the near-term catalyst, the more discovery focus the company is going to be this year. Thank you, everybody, for sending in your questions. Any follow-up questions from this webinar or watching the recording, please email me. That is fleck@kereport.com. That email address will be on all the descriptions as well. I will be following up with the team to get any of your follow-up questions answered, as well as cover the news, the drill results, and the exploration plans for this year. So Tim, Bryan, thank you very much for your time, everybody. Thank you for tuning in.
Thanks, Corey.
Yeah, thanks, Corey, and thanks everybody for tuning in. That was good.